Good evening, everybody. It is Mark Sebastian, your only option. I am here with our own Hannah Sellner, your director of new product development,
Hi,
and
everyone.
your advocate. Well, Tesla
Earnings are
earnings are
out.
out. They're out, and boy, they were bad.
Earnings per share were estimated at 44 cents, and it was only reported at 27 cents. So
Yes.
when Mark says bad, that's what he means by bad.
Yeah.
Yet, the stock is up a
Up.
little, if not even.
Yeah. The stock is currently stock closed up $10.47 on Tuesday. To 237.97. It's currently 239.50. So it's up a couple of call it $2. Close enough.
Mark, I'm gonna address the elephant in the room for some of the people here. Why does something like that happen? How could that possibly happen?
Well, and we can kind of look at Tesla here, and I know we said we're not going to look at stock charts, and we're not, but we do want to talk about, and we're going to get to this in the option flow, but if you look at the way this stock was trading ahead of time and the way the options were trading ahead of time, sentiment was so bad in this name. And the positioning was as such that traders were basically set up for the stock to basically bounce rather than sell off on this news, because traders, the smart traders, the type of traders that are positioning using options, we're seeing how bad the sentiment was and planning on flipping the script, and that's what we're seeing today so far.
Yeah, some of the participants today in the chat are saying that like a worst case scenario was already sort of baked in. I think that's definitely true to an extent. We're going to show you guys today. So the way that pro traders trade earnings is different than generally most retail traders. Earnings are a coin flip, and can be a rigged coin flip sometimes, kind of like today, where you get one side of the coin, but it's almost like you got the other. So there are three specific charts that Mark is watching ahead of earnings and then after earnings, and those are what he uses to actually make a decision about if there's an opportunity to make money, either before the earnings announcement happens or afterwards. So we're going to walk you guys through that today. Mark, the earnings announcements for Tesla isn't the end of today. So
No.
the announcement came out after the market closed, right before we came on here live. And then there's also the call that happens at 5:30. Can you talk about that a little bit for people here who may not know what that is or the effect it can have?
Yeah, this is the important piece. So think about what's happened over the last 3 months. This was a look at their last quarter. And
Mark,
the last
we can't
quarter.
See your screen right now. Can we share the screen, please?
Yeah, let's share our screen. So,
thank you.
If you look at Tesla and the way it was pricing in, you've got this earnings announcement and Tesla's up on that. But starting shortly, if it hasn't already started, is going to be the earnings conference call.
Right.
In the earnings conference call, Tesla already announced they're going to update their forward guidance. Forward guidance is what Tesla predicts the future is going to be, right, not what just happened. And stocks tend to move more on guidance than on the earnings themselves.
Yes, and we're going to show you three examples of in the past where that guidance has, in two examples, exaggerated a move that earnings already made. And then in the third example, it corrected a move that the earnings announcement had made. So that call and the forward guidance that comes out is just as important, if not more important, in affecting the actual price of the stock, which we'll show you some evidence for that today. And then we'll talk about kind of what we anticipate is going to be talked about in that call and how we think that it could affect a trading opportunity in Tesla tomorrow. For you, those of you that are here, welcome. Say hello in the chat if you're brand new. We love hosting these events with you guys. We love being able to do free content where you can join us. This is a regular piece of what we do here at Option Pit.
Absolutely.
We are going to walk you through. So the three charts that we're going to show you today and how Mark uses these charts to trade around an earnings announcement. This is a transferable skill, meaning next week we have Microsoft, Meta, Amazon, Apple all reporting. The charts and how Mark evaluates them that he's going to show you today and exactly what he did for Tesla. You can pick that up, take it to the earnings next week, and this is something that you can do yourself. So we will have a replay of this in this room at the end of today, so you can come back and revisit this. But I encourage you to grab a notepad or shut your phone off or pay attention, because we're going to give you some tools that you can use next week and for every earnings season hereafter.
Absolutely. Absolutely. So yeah, so we're waiting on the conference call. Why don't we dig into these into this demo on and walkthrough on Tesla earnings and how Tesla's performed, and then we'll come back and look at Tesla again afterwards.
Let's do it. So I'm going to share my screen right now, Justin. If we can just hop over to this so we only see this one. Perfect. All right. It's a little after 4:30. Let's get moving. As you guys know, the first place that we often look for guidance on what's going to happen now is what trends look like in the past. Mark, these are the last 4, both projections and actual earnings announcements for Tesla. And you see kind of a hodgepodge here of, they can miss earnings and the stock can drop, and they can miss earnings and the stock can pop. What are your takeaways from the last 4 Tesla earnings and what they mean for today?
Yeah, well, I think it goes to show you the actual report does not matter at all. Last quarter did not go well. The stock dropped a little bit. Previous quarter, it was incredible for Tesla and it rallied. And then missed earnings, dropped, and then the previous quarter missed earnings again and rallied. So the stock, what they report really has nothing to do with it. It has to do with what are they saying on the forward guidance? What innovations are they working on? Right. So I've already seen part of the reason why the stock is up. They released a picture of people building their robots in California. There's you want to speak to Elon Musk fanboys? Show them a picture of a robot being constructed on a work line, and they'll be excited.
Yeah, they also talked about some other specific pieces in what we think is going to be in the forward guidance, and we can talk about that in just a minute. So the takeaway from this is earnings does not mean that the stock is going to behave whether the earnings passed or failed. We basically get a mixed bag of results. Here's just some stock charts that illustrate that same thing. This was from Q1 2025. Earnings was a miss and the stock did drop. Going back a little further, this looks like this is Q3 from 2024. Earnings was a miss. The stock dropped. Here's Q2. Earnings was a miss, but then the stock popped. There's another example that we're going to show you guys in just a second, and we're going to focus on a piece of why we knew ahead of time what was going to happen with the direction of the stock. So we'll show you that in just a minute here. But absolutely. I talked earlier about what the impact, or Mark talked a bit about what the impact of the earnings call can be. And I want to walk you guys through 3 scenarios in the past where the earnings call either exaggerated a move that was made in a stock price from the earnings announcement, or it was corrected. So in both Q4 2022 and Q3 2023, Tesla was down on earnings expectations, and then that forward guidance from the earnings call actually forced it further. So looking at where we're at today, earnings were down, the stock's up a little bit. You guys know in the forward guidance calls, it's basically kind of like a marketing promotional call. They're going to talk about likely the best pieces of Tesla. They're likely going to talk about, like Mark said, some of the robotics. They're supposed to come out with an EV earlier this year that's more affordable. They're going to highlight likely the best parts of the company. So Mark, yes. Would you say it's safe to say that it's very possible that the slight move higher will be exaggerated higher further after the guidance call?
Yes. The piece that's going to be interesting is when it gets to Q&A and what questions are asked and how they're answered. That's usually when Elon will either mess up and say something he shouldn't have said, and the stock falls apart, or
Sure.
he hits on a point really strongly and the stock absolutely explodes. So the fact that they're not releasing any guidance until this call,
Right.
I think is going to make the front end of this call really important.
If anyone here today wanted to listen to that call, are those things that are just public information? How do you normally
Yeah,
get
you
the
can
news from
normally
those
listen in. Yeah, you can normally, if you want, you can listen in. You can reach out to investor relations on the website, and they'll have a number to call and listen in. I usually just go on Twitter. I'm planning on trading the options, so I'm not doing a lot in the stock after the bell, other than kind of seeing how it affects whatever. If I had a position, how that position is affected by the stock. So I don't need to be trading in real time with the
Yeah.
call, so I can just go on X and follow along with a couple of the wires, and that's perfectly great.
Does anyone in the room here today listen to those calls? Number one, I'm curious if you listen to the calls. Yes or no? Is that something you pay attention to? Do you follow them on Twitter? And then I also want to know from you guys in the room today, we have over 200 people here. Do you trade earnings? Do you trade into earnings? Do you trade out of earnings? Do you trade through earnings? Earnings happen 4 times a year. There are many catalysts when it comes to earnings. And if you have an understanding for how to make a smart, predictable, consistent trade, it can be very valuable. There's a lot of market opportunity around this. And one of the things Mark's going to show in just a minute here is earnings create movement, whether it's to the upside or to the downside. And as option traders, we can capture that movement as profit. So earnings hands down are an opportunity. I think some people get scared because it is a coin flip. And like we saw today, the earnings can be bad and the stock can behave differently. They can be unpredictable if you're trying to get the announcement right, or if you're trying to get the direction the stock takes because of the announcement right. Mark, you call that, what do you call it? A losing game? You have a name for it.
Yeah, I mean, it's a coin flip.
Yeah,
And
it's a losing game. So basically, as a pro trader, Mark, you play a different game. You're not trying to do the coin flip. You're not trying to guess if the earnings announcement is this, will the stock do this? There's no way to predict that. Binary events. Yes, you can call it a binary event, the same thing as a coin flip.
yes.
So, from a pro trader's perspective, Mark, there's really 3 charts that you look at, and we're going to get into that in a second. But a big key for how you digest both anticipating an earnings announcement and after is through big money flow. Can you just define for a second for people who may be new to that term what big money flow is? And then we'll show some examples.
Yeah, I mean, one of the great things about options that you don't see in stocks is you can really kind of track what large block orders are doing. So when we say big money flow, we're talking about JP Morgan, we're talking about Goldman Sachs, some huge hedge funds that are using options to express their opinion. All these big firms do that now because the option market is bigger than the stock market, and you get that leverage. So what we do is follow along with these huge orders to see how they are positioning themselves, and then try and position ourselves along the same lines.
That may be new for some of you here. You may not even know that that's something you can see, or that you can follow it or know what it means. But generally, big money flow, which is, like Mark said, big banks, hedge funds, they usually are trading based off of more information than we, a retail trader, may have. They usually know something. Now, we're not interested in knowing what they know or how they know it. We're just interested in seeing what opinion they have on where the stock's going to go. So are they making trades that they think the stock's going to go higher? Are they making trades they think the stock is going to go lower? We can actually track that. And we're going to show you today what Mark was looking at on Tesla to tell him what he thought, what big money flow thought was going to happen. And usually, Mark, correct me if I'm wrong, big money flow is not wrong.
They're usually not wrong. If you can properly decipher what they're telling you, they're going to be right.
When they pick a direction, your odds go way up outside of a coin flip. So let's look at a historical example on Tesla. Now, Mark, can you orient everyone to here to what are we looking at? So
Yes.
this is
So this is a snapshot of Tesla right before they announced earnings in October of 2024.
okay.
So this is their Q3 earnings.
Okay.
And what I want to point you toward is those green bars. All right. On the left side, in the middle is going to be the strike price. So it's saying Tesla October 25th, 2024, 200 strike.
Yep.
On the left side are calls. On the right side are puts.
Okay.
All right. And I want to point you toward those 200 puts. So the very top where that green box is around. And we want to look at the open interest, 27,276. So that open interest represents how many people own options. All right. The volume on the puts that day, 41,184.
Yep.
Now I went back and looked at that paper flow. And
when you say
were,
paper flow, Mark, you mean the
Yes.
actual pieces that make up this big order, correct?
Yes, the big volume. So on that day, 41,184 option contracts changed hands. I went back and looked at what were the majority of the bank flow, right? The side that was sending the order to the market. What was that? And it was put sales.
And
right?
put sales bet what about Tesla's price?
When I sell a put, that means I don't think Tesla is going to drop.
Okay.
In fact, I want it to go up.
So they are big money flow is expressing an opinion there that they think Tesla is going to go higher. And again,
Yes.
you guys, this is a historical example. This is from October 23rd, which is when Tesla earnings were reported. So this is basically like today, but rewind 8 months.
Yes.
That's what we're looking at.
And
so that's the right.
And that's the biggest volume of any put.
Right.
Then on the call side, the biggest volume of a call is the 220 call. And same thing, open interest, how many people own those contracts, own options, 18,150 on the day, 47,000 of these options were traded. And again, going in, looking at how paper positioned itself, they were buying calls.
So when Mark says paper, he means the same thing as big money flow. But
Yes.
between these two orders, big money flow was doubling down that they thought Tesla, after this earnings announcement, was going to go higher, correct?
Yes.
And we'll show you an
short
example.
Paper is short for professional customer paper. That's what that stands for.
I didn't actually know that.
And so that is when I say paper, I mean professional customer paper coming from a bank, a professional trading firm, or a hedge fund.
So the biggest option volume on October 23rd are these two chunks. On the left, the calls, on the right, the puts. If you add those together, that is big money flow doubling down that Tesla is going to go higher. And we actually have a screenshot here of one of the actual orders. So
yeah,
the up top is going to show you the summary. And then on the bottom in the white is just like two particular orders. And Mark, this was the put sale that was executed here. This big money flow cashed in at $2.9 million.
Yeah, they sold $2.9 million worth of puts and bought the 250 calls with some of that credit, but took in a huge amount of dollars. And this trade produces a lot of upside exposure if the stock takes off.
So translation for those of you here, that means that they had to be sure in order to make a trade like this. You have to be sure because when they take that cash in, they are exposing themselves to downside. It's not a trade that you would take unless you were certain. Correct, Mark?
Correct.
And sure enough, October 23rd, after market, they release the earnings. And what happens with the stock?
It absolutely went off like a rocket ship.
I mean, that's a run from what, 215 to 265?
Yeah, it went from 213 to a peak over 270 in 3 days. So those 220 calls that those traders were buying went from a few dollars to like $40 and $50 on the gap. It was a massive overnight move, and they perfectly positioned themselves. When I say they, I mean the big banks and the funds. They positioned themselves perfectly.
Raise your hand if you're someone here that would like to get a piece of one of those trades. Being able to know when big money flow takes a stance like this is essential. You have to be able to do that. And we're going to show you how Mark did that today with Tesla and how you can use some of these same skills next week with the big Mag 7, 8 earnings announcements that are coming out. So get excited. There is a lot of money to be made if you understand how to factor in the different pieces of this equation, which really are the 3 charts we're going to show you. None of them are the Tesla stock price chart. They are other charts about option prices, etc. And these are things that really anyone can find and use. So let's get into it a little bit, Mark. This is just a snapshot of Tesla the last 60 days. There are a bunch of course, as everyone here knows, market conditions affecting the price of Tesla. Elon Musk being a face in the news has affected the price of Tesla. Obviously, the tariff conversation has affected Tesla and their supply chain and what it may look like for them to make cars. A lot of EVs, though, that are going to be subject to some of these tariffs have actually seen a spike in sales over the last few months because a lot of consumers are trying to buy the cars before potentially the price goes up. That hasn't really happened in Tesla. So there's a lot of
Tesla doesn't have any exposure to Tesla cars do not have exposure to or almost no exposure to tariffs. Their solar side, so the part that used to be Solar City, the kind you put on your house, that's the side that's really getting hit by these tariffs, which is interesting. So the car side is actually, once these tariffs go into effect, they're in a really, they're in kind of a prime position from a pricing standpoint.
Let's look at the big money flow that happened today. And we'll start with kind of an overview, and then we'll get into some of the specific flow. So everybody, what we just showed you on Tesla from back in October and that big bet that was taken, we're going to show you what that looked like today. And Mark's going to break this down for you slowly so you can see what this means, because it looks a little different than the last chart. So walk us through
this was kind of taken during the middle of the day, but ended up pretty similar. There was, a few numbers changed here, and I'm happy to go through those. But for our intents and purposes, this is the way things kind of ended up. What you're looking at the top is the total volume, and I want you to notice that calls and puts about the same. And average volume, calls and puts are usually about the same, maybe a little bit more calls. Open interest, which means how many people own calls, how many people own puts, about the same.
Mm-hmm.
All right. Now, the next column shows us how many trades were sold by the customer on the bid. So these are trades we know were a sale. All right. They're not mid-market. They're not anything like that. And of the at this point, of the 602,000 that traded, over 33% had been puts sold on the bid. And what makes this really important is that that's 50,000 more puts that were sold. If you look at the next line down that shows you 173,634, that's 50,000 more puts sold than puts bought.
Right.
And now this is the most important part. Net delta. What I want you to think of as a delta is a share of stock. It's a share of Tesla.
Mm-hmm.
All right. And the net delta on puts sold was 1 million.
Mm-hmm.
And we know that they were sold because look at that premium. They took in $59 million of the premium.
Okay.
On the calls, it's the exact opposite, right? We sold on the bid, 181,000, bought on the offer, 205,000. More calls than puts, more calls bought than calls sold, more puts sold than puts bought. Right? Net delta, they bought about 750,000 deltas. They paid $1.5 million in premium. Net, we end up with traders buying close to 2 million shares using options.
Right.
They bought close to 2 million shares of Tesla stock, and they did it by actually taking in premium, which means they sold more options than they bought.
Right. So just like we showed in the example from last October, they're not only betting that Tesla's going to go higher, but they're choosing to express that opinion in a way that actually puts them at risk if it weren't to do that. So there's a certain degree here of certainty in order to make a trade like that that might expose you if you were wrong, correct?
Yes.
And then you also pointed out, Mark, that on a quote unquote normal day, the total net deltas here is normally around 300,000.
Yeah, plus or minus 300,000. You know, they either
Right.
like net offloaded a couple 100,000 shares or they net bought a couple 100,000 shares. 2 million is a pretty darn big number.
Absolutely. Would you say that that's typical for an earnings day to see a spike like that? Or is this higher than normal, lower than normal?
Yeah, I mean, typically going into earnings, you'll see an increase in how that positioning forms, but it's not always positive. Sometimes it's very negative. But yeah, we can pretty predictably on a quarter, quarter quite by quarter basis, the couple of days leading into those earnings, you're going to see a big kind of expression of position in the options over the like 2 or 3 days prior to earnings. And you'll even see some start to develop a week or two ahead of time.
If you are just joining us, we talked about at the top of the show, Tesla earnings have come out. They were under what analysts had projected, but the stock is still up a little bit. So the earnings announcement's actually out. We're still waiting for the earnings call, which will happen at 5:30. I think we're actually going to be able to stream that for you guys in this room, so you'll be able to hear some of that, see what something like that is actually like. Mark believes that earnings call will actually have more effect potentially on the stock price than the announcement itself did. So we'll get to that in just a second. At this point, if you have a question, put it in the chat. I'm going to start to answer those. Our staff will start to answer some of those on the side for you guys. I want to make sure that you are understanding the power of being able to follow big money flow and how it can actually anticipate what is potentially going to happen with the stock price as a result of the earnings and the earnings call. And Mark, what we're talking about today, we're focusing on Tesla, of course, because that's the announcement that came out. But this is a flow that you do the same way for other stocks that are reporting earnings, correct?
Absolutely. We have these huge announcements in the coming weeks. We've got Amazon, Apple, Microsoft, Meta, NVIDIA in several weeks. We're going to trade around these using this type of flow, using paper, professional customer paper, to analyze how these things are going to move both before the earnings, during earnings and post earnings. And the before and after are really the most important part.
WA asked, could you go over again how the 1.8 million deltas was calculated? It's basically a sum of the left side net deltas and the right side net deltas. I accidentally covered it a little bit with the square on the right, so you can't see all of it. But it's a sum of those two actually put together, WA.
Yeah.
Ray asked, how can you determine if the puts were sold and not bought? Well, it's actually listed here. You'll see on the left-hand sides here, it says sold on bid. Those would actually be options being sold. On the left, it's calls being sold. On the right, it's puts being sold. And then in the middle is just going to be a total of those two. And then if you look down a little lower where it says bought on ask, left on the call is the calls that were bought, right is the puts that were bought. So when you're trying to decode this and understand, okay, I see a lot of options moving around. What's actually happening? That's what you have to look at. And you want to factor in kind of the difference between those two. We'll show you another example of doing this.
Yeah,
so
and
a
lot of people ask, well, who's buying these calls? If everybody's selling, or if everyone's selling puts, who's buying these puts? The answer is market makers. That's why they are willing to do. That's why they're willing to do these trades, because they're getting that bid-ask spread that puts them in a position to not be at the same disadvantage that a normal person is when they trade against these guys.
So on your screen right now is the summary of the big money flow activity today. Let's look at some of the individual paper. So these are the actual orders, some of these that made up the totals we just looked at. What's most important to pay attention to here, Mark?
So what I want, this is a grouping of individual orders that were large block. These were some of the biggest trades that went up all day. And what I kind of wanted to point out was all the numbers that are kind of coming from the bottom. I want you to look at the April 25th. So these expire on Friday. The 205 puts. So we'll start from the bottom.
Okay.
Over 2,000 sold at $2.85. Then the next line up, April 25th, 2025. So Friday, 220 puts, over 2,000 sold at $5.30.
Wow.
Then we have more of the April 205 puts, another 2,400 sold at $2.75. The 200 puts.
Just for some perspective, you guys, these are $500,000 trades, $1 million trades, $2 million trades. This is some serious money thrown around on just individual orders to give you some perspective of the type of big money we're watching.
Right. Absolutely. You have the April 200 puts. Those were sold on the bid at 205. And then the very top line, the biggest order, 4,000 of the May 30th 155 puts. So these are further out of the money. They were using this high IV ahead of earnings, high option prices ahead of earnings to sell something way out of the money. They sold 4,000 of the 155 put at $2.53. That's actually through the bid. And so that, to me, you look at all this, the biggest orders, and all you're seeing is traders selling premium to basically express being long to owning shares of Tesla.
Right.
So,
they think Tesla's going to go higher. They want to own it.
Yeah.
There's a question in the chat about if these are things that Mark is going to teach in his masterclass. The short answer to that is yes. We'll talk about this a little bit more at the end of today. This is part of a trading strategy that Mark uses every single week called Delta Strike, where he tracks big money flow and uses these huge orders, just like the ones we see here, to follow big money into trades. This is one of his 4 core trading strategies. There will be 4 of them that are actually taught in his masterclass. So we'll talk about this in just a minute. Mark, one thing before you go a little further that I just want you to address, because everyone's asking this and it's a great question. They want to know if what we're seeing right now is proprietary or how they can get access to see something like this. Where is information like this available for everyone who's here today?
So there are vendors that you can get this from. These are pulled from LiveVol, or Trade Alert is another one that you can pull it from, but it's expensive. So I pay a subscription fee for LiveVol Pro that adds up to about $5,000 a year. And then on top of that, I'm paying for real-time data across options, stocks, and that total annual data feed adds up to like another $2,500. So I'm out $7,500 out the door, and happily so, in order to see this type of information, because that's how valuable this information is to me and should be to you. Did we lose Hannah? Yeah. We may have lost her feed, but yes. So we're using, I'm using LiveVol, and here you can show my screen. I'm using LiveVol, and in a name like Tesla, I've got a couple of different ways I search. So like in the case of what's going on with a specific strike, I'm gonna go to underlying trades by strike, and I want to go to the 200 puts that expire on, oh, whoops, this is the wrong date. I want to go to 2025, and I go to April, and I'm gonna go here. And I want to look at that really active strike that we have today, the 200 puts, 81,000 of those traded today. Think about that. And again, lots and lots of large blocks selling. You get a little bit of buying here, in and out, but lots and lots of puts being sold in anticipation of the stock not going down. So when you see major put selling, that's telling me that these earnings, as high as they're expected, might be a little bit more muted. And that's what gets me going on this. So there's that exact strike that we were just talking about, those 200 puts, and you can see all those big block orders. And folks, I'm pointing at my screen here. My arm's not just up for no reason. Are put sales.
Mark, can you hear me okay?
I hear you, Hannah. You're back. Hooray.
Sorry, my internet just went out, so I just switched to my phone. So if you could share the slides. Sorry, everyone.
Yes.
Surprise.
Let me get the slides open.
Okay, cool. And we can just take them through the three charts. Sorry, you guys, I don't know what happened. I was there and then I wasn't all of a sudden. Justin, if you can, because I can't see the chat anymore, if you have some things that you want to either like turn your mic on, you could throw questions to us as we go so Mark doesn't have to look at it or whatever. If you want to help make that easier, that would be great. Thank you.
Yeah, give me 1 second here. There we go. And let me.
The volume's okay.
Right page.
I've got you propped against my computer. Volume's okay?
All right. Yeah, your volume's great.
Okay, great.
All right. And let me just get the screen shared. Wasn't planning on sharing the screen, but here we are. And, so I showed you what that order flow looks like, how that paper looks when you are, and let me move that over here. And then then I pulled up LiveVol and showed you how I see it live. And so this money so far has been very right because they took in a lot of premium, a lot of money. And so far, the stock is doing nothing. That is, the only way things could be better for them was be if it was up like $4 or $5. That's kind of what they're looking for. So now, Hannah, we've got something fun for everybody for attending. A little surprise for you guys.
Surprise! We're going to do a pop-up mini masterclass for you guys. If you haven't seen in your emails, Mark is going to be hosting an 8-week masterclass. There's a getting started class for it this Thursday, and then starting next Friday, May 2nd, it's going to be 8 Fridays in a row for an hour every day. And we're going to teach during that class some of what we showed you here today. And we'll talk more about that masterclass in just a minute, but we're going to take the next 5 to 7 minutes to show you what a mini masterclass would look like. And this is the format that Mark's 8-week masterclass is going to follow. So for today, we're going to talk about what Mark looked at today ahead of Tesla earnings. And it's those 3 charts that we've been talking about for the last few minutes. And like we said, you can use this exact workflow for upcoming earnings reports like next week. So get your notepad out and let's get into it with chart 1, Mark.
Yes, chart 1 is movement. This is a chart, we call it average true range. It's how much Tesla is moving between its highs and lows every day.
That yellow line is a little difficult to see. Sorry, you guys, but
I know.
Just the average movement of Tesla every day. So it could be really high or it could be really low. What does it tell us either way? Why do we want to know something like this, Mark?
Well, it's a really clear example of how hard, whether you want to buy options or whether you don't. And I want to buy options when I see movement increasing. I want to express my opinion by buying a call or a put when we see movement going up. And so I pay real close attention to what does movement look like within about 9 to 10 days, we start looking real closely at a stock and see how is this stock moving ahead of its earnings. And is that movement increasing as we go into earnings or is it decreasing? If it's increasing, I want to set up a pre-earnings play. That's part of my criteria to set up a pre-earnings play. We're going to give you the whole layout here in a second.
So like we said earlier a little bit, Mark either trades going into the earnings announcement or coming out of the earnings announcement. So there's some timing for that we'll share with you. But he uses each of these charts to help him determine, does he want to trade before or does he want to trade after? So the first one, like you just said, we're actually looking to see how much does the stock move historically to make sure that it can actually make money for us. We want a movement that we can actually get paid on. Mark, how can people find this? What is this?
It's under the word, it's average true range. I have it set to the past 10 days. Most brokerage firms, you can pull this up. If not, you can go on something like Bar Chart. LiveVol obviously has it. There are plenty of ways to find this number. All right. Should we look at chart 2?
Let's look at chart 2.
All right. Now, the last chart was a chart of how much is the stock actually moving. This chart is how expensive is it to buy an option. And this is Tesla options with 30 days to expire. And it's a chart, it's a moving chart of how expensive it is to buy or sell a call or a put on Tesla. Heading into this, I want to see where it is relative to historical, where option prices were prior to earnings. And I want to see what these option prices are whether they're going up, right? I want to see movement increasing, and I want to see an uptick in option pricing as I'm setting up a trade. We're already potentially buying that earnings contract because we know it's going to hold some value, but we want to kind of put more wind at our back.
I would assume going into earnings, Mark, that normally this chart is going to go up. Normally, because of demand, et cetera, the option prices will get more expensive. How do you determine between, okay, this is too expensive, I don't actually want to get into it, or you think it's still worth the bang for your buck? What's kind of the line there for you?
Yeah, well, if my goal, if I'm doing something pre-earnings, then I just want to make sure I haven't already bought a big influx of order flow. A big influx of changes in premium. So heading into an earnings announcement, I want to see option prices kind of slowly move up. And that's why we're looking 9-10 days out. We should start to see the movement a little bit ahead of earnings. And then prior to earnings, you'll see a big pop a couple of days ahead of time. Our goal is to kind of own those options before we get that kind of big push on earnings, that big demand, right? A lot of people don't pay attention to, oh, Tesla reports, I'm going to start trading it on Monday or Tuesday, right? I want to be selling my options to those people. That is my goal.
How is this important to use for after earnings? So for Tesla, you didn't make a trade going into this. You wanted to wait and see. And these charts told you that it was going to be more profitable to wait to trade till after the earnings. So if you're using these charts to make a trade afterwards, what are you looking for? Is it the same thing or does it look different?
Now, we expect, obviously, after earnings, some drop in movement, a small drop in movement, but we want to see movement stay firm. And then I want to see the option prices drop dramatically. And I'm talking to below where they were when I started looking at them 10 days ago.
Which was what level here for Tesla? Where are you looking?
So, you'd be talking Tesla started, getting a little bit of a bid kind of end of March, which makes sense. You do have a lot of noise in there, which is kind of makes it a little bit more difficult. I don't know if you guys have noticed, but there's been a little bit of market-wide volatility. But you do actually see Tesla get a little bit of a, start to get a bid back down here.
Okay.
And then take off up here. Normally, it's going to be a little bit more consolidated. If we went back to the October earnings, that it absolutely blew the doors off. You can actually see, the option prices start to creep a little bit higher. And then, the announcement comes out, they get expensive, and then premiums drop.
So for a buying opportunity post earnings, you're looking for this particular chart, which is telling us how expensive or cheap options are. You're looking for it to return to sort of the pre earnings spike levels, maybe here
Yeah, and
88 or 70. Right now it's like around 80. Is that about right?
absolutely. And sometimes you'll actually see an overreaction. And that's when it gets really fun
Oh,
because there'll be such a rush.
meaning it could drop even further.
Yes, there'll be such a rush of people that are trying to get out of whatever play they had on earnings that they absolutely flood the market
Right.
with option sales, which crashes option prices. Right? Imagine I'm a used car dealer and I've got 15 people trying to sell me their cars. The used car market is crashing in their sight.
Right.
The same thing can happen with option pricing.
We are about to be able to go pick up a really sweet used car on the cheap.
That is our goal.
All right, let's move to chart 3 here, which this is basically, if you think about, because there's really two pieces of an earnings flow. There's an expectation, and then there's what actually happens. This chart shows us both of those. So the expectation here is that blue column that says implied move. And then to the right of that, the actual move is what the stock actually did. So Mark, going back, this is a chart for Tesla still, you guys. Even though it says AMC, that means after market close. So this is for Tesla. And these are all on earnings days, correct? Earnings announcement.
Yes.
Okay.
This is the earnings. This is what was happening into earnings. That's the implied move, and then we'll find the actual move tomorrow. At the
Right.
end of the day, they'll report the actual move here, and then you'll get kind of a report on how it performed.
So what I'm seeing more often than not, it looks like the implied move underestimates what the actual move is going to be.
Yes, that's true. But what's interesting is the last time it was about what the implied move was right now, and that was also an underperformer. So just something that I'm kind of noting. I'm not making any conclusions yet. That data set's way too small, but you're right. Leading into this earnings announcement, 9 out of the last 12 earnings cycles, Tesla had moved more than the market was pricing in.
What does that mean for option prices? What does that mean for us as traders? Is that a good thing or a bad thing?
Well, that means that leading into those earnings, option prices were not expensive enough, or the announcement expectation wasn't properly priced. And if traders were potentially following money flow, we might have, like, let's say, October of 2023, you would have seen, wow, they're selling a lot of puts and they're buying a lot. When I say there, I mean these big banks, hedge funds, traders are buying a lot of calls and selling a lot of puts, and that expire on Friday. I wonder why. And now the stock was, those calls were through the money by $40 the next day.
In just a second, we're going to talk about what all of this means for Tesla tomorrow. So Mark's going to walk through, like, this big event happened. There's some movements. The options are priced a certain way. What does that mean for us as traders? When might we want to hop into a trade? And what does the timing of that look like? So we're going to lay out in just a second before versus after, why Mark would trade one of these before an earnings announcement versus after, and some specifics about how he does that. One point I want to clarify, though, before we move to that, Mark, is that you very, very rarely buy and hold options through earnings. And you did not do that today with Tesla. Like we said earlier, earnings are a coin flip, and you're not a gambler, you're a trader. So you're looking to play either into the earnings or after the earnings. Let's talk about how you decide if you're going to do one versus the other.
Yes, let's dig into that.
Let's do. Go ahead.
So yeah, but
also,
so before we trade,
sorry.
I want to make sure if we're gonna trade before, as I said, we want to see option prices increasing, right? We want to see them come from the baseline and starting to go up. All right. Movement of the stock is increasing. All right. So the stock is getting more excitement. Stocks that move more mean there's more interest in them, especially when they're liquid like Tesla is. And then I want to see earnings expectations that are average or above. All right. I don't want a really low, low expectation earnings. I want them to be excited about these earnings. Why? Because those options will hold their value better than when those option prices are depressed ahead of earnings.
Mark, you earlier that you look at these around 9 days before their earnings announcement. So that's your particular day. 9 days before the announcement is when you're doing this. Why is it 9 days? What's with the sweet spot?
Yeah, I mean, that's the area where traders start to position themselves, where people have the foresight to start getting themselves built for earnings, start building out their positions, especially when they want to kind of come in a little by little every single day. So 9 days tends to be, I'll start seeing some orders hit with that stock, and that tends to be around 9 days. Sometimes it's 10, sometimes it's 11, sometimes it's 8. But you're going to see interest pick up. You're going to see that those options start to increase, and you're going to see movement start to increase. You see those three together, and now you're in a position to start building a pre-earnings play. Now, after, what we want to see after earnings is movement on the day of earnings is big, and preferably a little bit of follow through the next day or two.
Okay. Would you categorize Tesla's movement today so far as big? Or
no. Getting bigger. Currently up $6.37, now up 2%.
How much movement for over the next few days? What would qualify for high movement?
Yeah, I would have liked to see. We want to see the move tomorrow about what the options were pricing in, so that about 9%, and then a little bit of follow through on that move, or that move to hold. We don't want to see a gap and then pull back. We want to see a gap and hold. Then we wait a day or two. Sometimes we'll play, if there's a day trade opportunity there, I might jump in on that day. But generally, I'm not trading the first day of earnings, so not tomorrow. I'm looking at Thursday. I'm looking at Friday to allow the market to settle, to let those traders that rushed out really just hammer those option prices. And then when they're at their absolute lows, I'm going to scoop in and buy them.
You're also looking for those option prices to drop dramatically. We kind of gave that already. It sounds like you're looking for that to go back to like 68, 70, or it might fall off a cliff, like you said, when the supply and demand gets messed up. Sometimes you can get actually a really cheap price. For chart 3 here, Mark, did the stock earnings expectations, or is that something that we would have to wait till tomorrow to see?
So as of now, again, they were pricing at almost 9%. As of now, it's moving 3.3%. So it would be in the after hours, it's under. However, we're going to see what happens in the market tomorrow, right? The game isn't over until the very end of the day on Wednesday. But at onset, so far, it is not moving as much as we expected. All right. So how much does an earnings hit or miss matter, Hannah? You talked about this at the top, and you're the head of option research, and you've got some pretty good conclusions on this.
Well, basically the conclusion is that today it really didn't. I think the way that stocks, and you can confirm this, Mark, but I think the way that stocks react to earnings reports has changed a lot over the last few years. And you guys, as traders, have probably seen that. Whether a stock hit the earnings or missed it used to be pretty much a direct correlation with the stock either going higher if it hit the earnings or lower if it missed the earnings. Earnings announcements don't really behave that linearly anymore. So today, it really doesn't matter. We saw that already. Tesla really underperformed what we thought it would hit earnings per share by almost 50%. Yet, like Mark was just saying, the stock's up 3%. So we are focused on the forward guidance, which starts in just a few minutes here, and how that might affect the move further. So like Mark's saying, right now, the actual move is less than the expected, but this forward guidance could push it higher, and it could actually be within some of those benchmarks. So we would be interested in making a trade tomorrow or Thursday or Friday. So this is an ever-changing process, but what you've put together here, Mark, with these three charts and how you evaluate earnings, it kind of removes this factor. So it's not
Yes.
guess and check. It's very specific, hard evidence. These three charts, you're looking for very specific results to tell you if you have the most advantage to make a trade or not.
Yeah, I mean, why flip a coin when the market gives me all the clues I need to know whether I want to buy an option, and then looking at the order flow, knowing what direction I want to set that trade in, and then be out of the trade ahead of earnings. Let earnings happen. Let those who bought calls into this earnings announcement learn the valuable lesson of I was right and I still lost money on my options because the stock didn't move enough.
Right.
Let other people learn that lesson.
So what Mark just walked you guys through, this is something he does in Delta Strike, which is one of his core forward trading services. There are three others we'll talk about in just a second. So we gave you some tools today, so you can use these and you can go do this yourself. Or Mark does this live with his subscribers anyway. So he actually goes through daily, like a big money flow watch list, where he shows you the biggest orders he's seen, what he thinks it means for the possibility of a trade. And he's going to be doing that on some important earnings that are upcoming. If you go to the next slide, Mark, we have later this today with also GE was this morning, and then Tesla. IBM's tomorrow. Thursday's Google, which is a big one. And then we already talked about next week, Microsoft, Meta, Apple, and Amazon, and then NVIDIA a few weeks after that. But Mark, you are anticipating trading these, and you're also going to be teaching people how to learn to do this in your eight-week masterclass, which
Absolutely.
talk about
Yeah,
that,
and
what you
what
plan
I
during that masterclass.
yeah, I mean, looking at these earnings announcements, we're in that 9-day window with Microsoft, Meta, Qualcomm, Apple, Amazon, Berkshire, and those are going to be a lot of fun areas to trade. And I want to kind of take you along my trading path in this masterclass and all the different strategies I use and how I use them. Now, I don't expect you to have each of these strategies speak to you, but there will be one that you will really like. And trading needs to be a part of your portfolio, right? We have our investment portfolio. Part of that investment portfolio should be your trading account, because when the market goes haywire like this, it's an opportunity, and an opportunity that I want you guys to take advantage of. So
If
that is what
you go to the slide here, Mark, you could actually see some masterclass details. There you go. So
yeah.
we're kicking it off this Thursday with a getting started class. And then, like I said, it's going to be 1 hour on Friday for the next 8 Fridays. If you can't make these, if you can make 7 of them, but not the 8th, all of them will be recorded and uploaded so that you can review them basically forever. We'll never take down those recordings. You could use them forever. You'll always have access to them. That's not something that would go away. So after the 8 weeks of live content is done, you'll still have that access. If you go to the next slide, Mark, There are 4 core strategies and 4 key indicators that Mark is going to be teaching over the course of this masterclass. And we'll show you those on the next slide. But before we even show you what they are, I want to show you a result. If you put $1,000 in all of the trades in these 4 strategies in all of 2024, it would have amounted to $115,000 in profit. So if you're sitting there wondering, do these trades work? Is this worth my time? That is a potential result. That's a real money result that was generated with $1,000 in each trade all of last year. So the next slide, Mark, shows the 4 strategies and the types of trades you execute. And we don't hide this from you guys. We want you to know what you would learn in this masterclass. And if you haven't made these types of trades before, Mark's going to teach you how to do that. And he's going to give you some key indicators that you can use for each of the strategies. So Mark, will you just walk us through this? Like the strategy you learn, which product that means you would get access to, and then like the types of trades that you'll be
Yeah.
talking.
So if you learning about following big money, the big piece that we've been talking about today, that is done in Delta Strike. Those are typically quick option trades. We try and keep them as low cost as possible. Then we have the daily volatility trades of underpriced and overpriced options across VIX, S&P 500, SPY, Qs, some of the VIX ETPs. That's done in Trading Desk, and you're going to be using calls and puts and different combinations. And there's a ton of education on how to trade and manage those. And I'm going to teach you about our approach there. Zero DTE, we're going to learn about using different charting, where you're going to learn about pitchforks. You're going to learn about standard deviation bands and using minute charts and 5-minute charts to place and execute butterflies for next to nothing with huge payouts or even free. And then finally, Trade Zone, and that's where we're looking for pro level swing trades on large cap stocks. And I set up this zone trade to catch these big stocks when they're overbought or oversold. So in this market with some of these huge names like Tesla and Amazon and Microsoft, starting to get oversold, the Trade Zone is like perfect for setting up your longer term trades to get long a lot of the names that you really like. Those are the 4 core strategies that I'm going to be teaching you about and educating you about over the course of the next 8 weeks.
You also have a key indicator that goes with each of these. So we looked a little today at the one for Delta Strike, which is big money flow. See it, track it, trade with it. There are key indicators that go with Trading Desk, Zero DTE, and also Trade Zone, meaning there's a tool that you can use to help you execute this strategy. It's not like you would sit here and learn it and then, God bless you, go and try to do your best. There's going to be an indicator, a scanner, a chart setup that will make it easier for you to use that to make these types of trades basically forever. So if we haven't posted already, post the link to the masterclass. You guys just got kind of a taste today going through the 3 charts, walking you through what the masterclass is going to look like. And we are keeping this to a super small group. We're only selling 25 of these. We want this to be a very small group with Mark. We've sold, I think, 10 of them so far. So we've almost sold half of the slots for the masterclass. And Mark, you requested this. You wanted to keep it to a really small group. And can you talk about that a little bit? Like you wanted to have a different level of kind of one-on-one mentorship or small group mentorship with this group.
Yeah, I mean, with a class of 25, I can have an intimate conversation, discussion, and have the time at the end to really answer all the questions coming from everybody that joins. So my goal is for this to be more that true, like that feeling of talking to me directly and not just a big seminar.
Absolutely. So we'll get that posted above us. Make sure that's posted in the chat. Again, I can't see those. Mark, if you have some questions in the chat that you want to address, let's go through those. And then we'll toss it over. I think we're going to stream actually the the earnings call for Tesla into this room after this. Justin, are we still doing that? Because we can just take a few more minutes and then we can pipe that in.
Yeah, I think the call, something, either the opening statement or something got released, because Tesla has made a nice move higher. It's now up 3.7%. It's been up as much as 4%. So again, the earnings really bad, but so far, they're liking whatever is being leaked.
Mark, do you plan to put a trade on Tesla in the next few days, as long as we hit, sort of these parameters?
It's entirely possible. If it hits those parameters and we get that final piece, right, that really clear directional trading by these big banks, then the answer is yes. But if we hit those three things and I don't see kind of banks and funds really dictating their directional opinion, then I'm not going to be trading it. So,
and honestly, if it's not Tesla, it could very likely be one of the other stocks reporting next week that you're either trading into the announcement or out of. Yes. I assume you'd be doing those trades inside of Delta Strike, correct, Mark?
Delta Strike, and potentially there would be some specific type of trades I would want to do inside a trading desk that are more non-directional.
If you're someone here today and you are interested in getting access to those types of trades, and maybe you're not ready to commit to the masterclass, or you don't feel like that makes sense for you right now as a trader, please give our team a call. We'll throw a number in the chat right now so that you guys can call us and ask about Delta Strike or ask about Trading Desk. The phone number is going to be 888-872-3301. Justin, if you can put that in the chat for everyone. Give us a phone call and ask about Delta Strike, ask about Trading Desk. We have some weekly subscription options or even a monthly subscription option. So you could actually get access to these big money flow alerts that Mark will be releasing in either of those services. So feel free to give us a call and we can get you started.
Absolutely. Give us a call and join in. I think what we've shown, looking at Tesla, is that so far, big money flow dictated exactly what was going to happen. 100%. It could change. It could change. But what do we have? We have Tesla up on a somewhat muted move. What did we see? Traders selling a lot of puts. So that means you want Tesla to go up, but not explode up. And we saw some call buying. But net, the positioning was as such where they're winning if Tesla moves higher. And it continues to move higher. They're liking this conference call, Hannah. We're now up $10. So again, they dictated it.
Tracking big money flow is exciting because it makes earnings an actual opportunity. Like you can actually have a way better chance of knowing what's going to happen with the stock price than if you're just focused on what the earnings announcement actually said.
Yes.
Be able to follow where the money is going. We don't want to guess. We don't want to wonder. We want to know. And the way to know is to follow that money.
So this is a great question from William. He says, so fundamentals don't matter for an investment? 100%. If you're buying a stock and planning on holding it for a year and not having, so you don't pay a capital gains tax, or so you fall under a capital gains tax, yes, fundamentals matter. But when you're setting up a pre or post earnings trade, fundamentals do not matter. What matters is price. What matters is movement. And what matters is the cost of those options. And that is it.
In fact, just looking at those three things is going to give you a way better sense of where the price can go than the fundamentals will. So if you're trying to actually read the market, what is it telling me? What should I do? You want to be focusing on the three charts we showed you today, even more than you want to focus on the earnings result itself. Any other good questions you see, Mark?
I'm looking.
If you guys also have questions about our masterclass, give us a phone call. We have an amazing phone team. If you are in one of Mark's services, so if you're in Delta Strike, if you're in Trading Desk, DTE, or Trade Zone, and you're wondering, is this something I actually need? You're going to walk away with 4 indicators that you can use to make all of these different types of trades. So I encourage you, if you are a member of any of Mark's services, give us a phone call. I think we're offering some discounts for people who own a Mark subscription already. So
Yes.
I'll make sure you mention that on the phone. Hey, I'm already a member of Delta Strike, but I'm interested in the Masterclass. We've been working with some people either on a payment plan or a deal on the Masterclass price. So give us a call and we can work with you on that.
Yes. And the one question I had is, so it's like that 0DTE, is that trading? Is that day trading? And the answer is yes, but I have some workarounds for everybody. So you don't need to worry about day trading when you're a member of Option Pit, because we can teach you how to day trade without day trading. That's one of our clever little tricks that we have.
0DTE is exciting too because it really is the most popular, the hottest trade in the market. And what we mean when we say that is every single day, over half of the volume in the market is options. There are more options
Yes.
traded every day than stock. And of those options that are traded, over half of them are 0 days to expiration options. So buying an option today that expires today, that is a massive amount of money moving in the market every day. And like we went through today, movement can equal profits if you know how to harness it. So that's what Mark's doing in 0DTE. And that's why he's able to have such a high profit target on those trades every day, Mark, is because you get that serious movement that you need in order to get paid on the options.
Absolutely. Another question, Northford Florida man is asking, like, hey, I'm a member of X and X service. Give my team a call, 888-872-3301, and they can answer any questions that you have about pricing. And then Jerry dropped a 7 days without 0DTE makes 1 week, WEAK. Very punny. I like it.
He's playing to his audience.
He is indeed.
He knows Mark cannot resist a dad joke.
No, I cannot.
Mark, anything you want to leave everyone with today? What's Tesla at now? What you looking at for tomorrow? Kind of our last CTA here for everyone.
Yeah, so Tesla is currently up about 5%. I expect it to move less than expected. Don't do anything in the first 20 minutes unless you are closing, because this one feels like there's going to be some interesting swings in the first 20 minutes. So if put in a price and it's not there, and wait 30 seconds, it might be there.
You mean the first minutes of tomorrow?
Yeah. Stay out of the way. All right. That's just a general warning to people. The first 20 minutes is an opportunity to close winners, not, and that is it. But I'm going to be looking to see how hard they collapse options. My guess is this is going to be a bloodbath. And then with how excited they were, if this underperforms for the second time in a row, there, in terms of the market, Tesla moves less than the market was pricing in. There is going to be a heavy hand selling calls and puts to the market, and is going to hopefully play into our hands by Friday to, if we get some order flow to set up a long or a short. And again, join me in this masterclass and you're going to learn kind of everything that I do on a day-to-day basis, and the different trading strategies I'm trading and watching. It's a great educational opportunity, and I'm really looking forward to, having a small group of 25 to work with on a weekly basis. So take this opportunity to join us. And again, if you're already a client of one of our other services, give us a call, 888-872-3301.
Thank you, Mark. Great session today. I'm excited to see what happens overnight and where Tesla ends up going into the market tomorrow. And we'll see if it materializes into a trade in Delta Strike or Trading Desk. Again, if you make sure you get access to that trade. Give us a call, ask about Delta Strike, ask about Trading Desk, and you can get in. Sorry about my technical difficulties today, but we survived.
We powered through it. You did good.
Thanks.
So
thank you guys for being here today. We always appreciate your attendance at these events, and we have a great time doing them, but it wouldn't matter if you guys weren't here. So thanks for coming. We'll have a replay of today's session in this room right after this. So if you want to come back, review the levels, review the 3 charts in preparation for tomorrow morning, you'll be able to do that.
Absolutely. So for Hannah, cell phone Sellner, I am Mark Sebastian. I am your only option. And we hope you have an amazing rest of your evening. Go Cubs.
Go Avs. Thank you guys. Have a good night.
Good afternoon, everyone, and welcome to Tesla's first quarter 2025 Q&A webcast. My name is Travis Axelrod, Head of Investor Relations, and I'm joined today by Elon Musk, Dev Taneja, and a number of other executives. Our Q1 results were announced at about 3 p.m. Central Time in the update deck being published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to 1 question and 1 follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon will be providing an update. Elon?
Hello, everyone. Well, it's never a dull moment these days. One thing's for sure, every day is going to be exciting. As people know, there's been some blowback for the time that I've been spending in government with the Department of Government Efficiency, or DOGE. I think the work that we're doing there is actually very important for trying to rein in the insane deficit that is leading our country, the United States, to destruction. And the DOGE team has made a lot of progress in addressing waste and fraud. The natural blowback from that is those who were receiving the wasteful dollars and the fraudulent dollars will try to attack me and DOGE team and anything associated with me. So then I'm really left with 2 choices. Should we just let the waste and fraud continue? And it was continuing at it to grow at a really unsustainable pace that was bankrupting the country, or to fight the waste and fraud and try to get the country back on the right track. And I believe the right thing to do is to fight the waste and fraud and get the country back on the right track, and working together with President Trump and his administration. Because if the ship of America goes down, we all go down with it, including Tesla and everyone else. So I think this is this critical work. Now, the protests that you'll see out there, they're very organized, they're paid for. They're obviously not going to admit that the reason that they're protesting is because they're receiving fraudulent money, or that they're the recipients of wasteful largesse, but they're going to come up with some other reason. But that is the real reason for the protests. The actual reason is that those receiving the waste and fraud wish to continue receiving it. That is the real thing that's going on here, obviously. So now that said, I do think there's the large slug of work necessary to get the DOGE team in place and working in the government to get the financial house in order is mostly done. And I think starting probably in next month, May, my time allocation to DOGE will drop significantly. I'll have to continue doing it for, I think, probably the remainder of the president's term, just to make sure that the waste and fraud that we stop does not come roaring back, which we'll do if it has the chance. So I think I'll continue to spend, a day or two per week on government matters for as long as the president would like me to do so, and as long as it is useful. But starting next month, I'll be allocating far more of my time to Tesla, and now that the major work of establishing the Department of Government Efficiency is done. So at Tesla, we've gone through many a crisis over the years, and actually been through many near-death experiences. Like we probably were on the ragged edge of death, at least on maybe a dozen times. It's been so many times. This is not one of those times. We're not on the ragged edge of death, not even close. But there are some challenges, and I expect that this year will be. There'll probably be some unexpected bumps this year, but I remain extremely optimistic about the future of the company. The future of the company is fundamentally based on large-scale autonomous cars, and large-scale, in large volume, vast numbers of autonomous humanoid robots. So the value of a company that makes truly useful autonomous humanoid robots and autonomous useful vehicles at scale, at low cost, which is what Tesla's going to do, is staggering. I continue to believe that Tesla, with excellent execution, will be the most valuable company in the world by far. But that's an important if. We must execute well. But if we do execute well, I think Tesla will be the most valuable company in the world by far. It may be as valuable as the next 5 companies combined. So, but there'll be a few bumps along the road before that happens. I said, I think on the last earnings call that, we'll start to see the prosperity of autonomy take effect in a material way around the middle of next year. We still expect to be selling fully autonomous rides in June in Austin, as we've been saying for now several months. So that's continued. But the real question from a financial standpoint is, when does it really become material and affect the bottom line of the company, and start to be a fundamental part of when does it move the financial needle in a significant way? That's probably around the middle of next year, second half of next year. And then once it does start to move the financial needle in a significant way, it will really go exponential from there. So I'd encourage people to look beyond like the, some sort of bumps and potholes of the road immediately ahead of us, but lift your gaze to the bright, shining, citadel on a hill. I don't know, some Reagan-esque imagery, and that's where we're headed, and not too distant future, like I said, end of next year type of thing. So, let's see. With respect to supply chain risk, something that Tesla has been working on for several years is to localize supply chains. This actually makes sense from a cost standpoint, and from a logistics risk standpoint. Is to have the supply chains be at least located on the continent in which the car is built. And so we are, I think, the least affected car company with respect to tariffs, at least in most respects. I mean, it remains to be seen. Now tariffs are still, tough on a company when margins are still low. But we do have localized supply chains in North America, Europe, and China. So that puts us in a stronger position than any of our competitors. And undoubtedly, I'm going to get a lot of questions about tariffs. And I just want to emphasize that the tariff decision is entirely up to the President of the United States. I will weigh in with my advice with the President, which he will listen to my advice, but then it's up to him, of course, to make his decision. I've been on the record many times as saying that I believe lower tariffs are generally a good idea for prosperity. But this decision is fundamentally up to the elected representative of the people, being the President of the United States. So, I'll continue to advocate for lower tariffs rather than higher tariffs, but that's all I can do. So, now let me walk you through why I'm so excited about the future of Tesla. So first of all, autonomy. The team and I are laser focused on bringing robotaxi to Austin in June. Unsupervised autonomy will first be solved for the Model Y in Austin, and then actually we should parse out the terms robotic taxi or robotaxi and just generally like what's the Cybercab, because we've got a product called the Cybercab, and then but any Tesla, which could be an S3, X, or Y that is autonomous, is a robotic taxi or robotaxi. It's very confusing. So the vast majority of the Tesla fleet that we've made is capable of being a robotaxi or robotic taxi. As we're going from, once we can make the system work where you can have paid rides fully autonomously with no one in the car in one city, that is a very scalable thing for us to go broadly within whatever jurisdiction allows us to operate. So because what we're solving for is a general solution to autonomy, not a city-specific solution for autonomy, once we make it work in a few cities, we can basically make it work in all cities in that legal jurisdiction. So once we can make it basically work in a few cities in America, we can make it work anywhere in America. Once we can make it work in a few cities in China, it can work anywhere in China, likewise in Europe, limited only by regulatory approvals. So this is the advantage of having a generalized solution using artificial intelligence and an AI chip that Tesla designed specifically for this purpose, as opposed to very expensive sensors and high precision maps of a particular neighborhood where that neighborhood may change, or often changes, and then the cost stops working. So we have a general solution instead of a specific solution. Yeah. Then with regard to Optimus, making good progress on Optimus. We expect to have thousands of Optimus robots working in Tesla factories by the end of this year, doing useful work. We expect to scale Optimus up faster than any product, I think, in history, to get to millions of units per year as soon as possible. I think feel confident in getting to 1 million units per year in less than 5 years, maybe 4 years. So But 2030, I feel confident in predicting 1 million Optimus units per year. It might be 2029. So let's see, with respect to energy, our energy business is doing very well. The Megapack enables utility companies to output far more total energy than would otherwise be the case. When you think of the energy capability of a grid, it's much more than say total energy output per year. If the power plants could operate at peak power for all 24 hours, as opposed to being at half power, or sometimes a quarter power at night, then you could double the energy output of existing power plants. But in order to do that, you need to buffer the energy so that you can charge up the something like battery pack at night and then discharge into the grid during the day. So this is a massive unlock on total energy output of any given grid over the course of a year. And utility companies are beginning to realize this and are buying in our megapacks at scale. So at this point, a gigawatt class battery is quite a common thing. So we have many orders in the hopper for gigawatt and beyond batteries. And we expect the stationary energy storage business to scale ultimately to terawatts per year. So very, very good numbers. Now, Q1, first quarters of a year are usually pretty tricky because it's usually the worst quarter of the year because people don't want to go buy a car in the middle of winter during a blizzard. So, we picked Q1 as like a good quarter to do a cutover to the new version of the Model Y, and we changed production of the world's best-selling cars. With remembering the Model Y is the best-selling car of any kind on Earth, with a 1.1 billion unit per year output of a single model. And we did this changeover at the same time in factories all across the world. So congratulations to the Tesla team on an amazing job in pulling off what is a very difficult transition. So yeah, it's really, that was very impressive work. So yeah, in conclusion, while there are many near-term headwinds for us and the broader industry, the future for Tesla is brighter than ever. The value of the company is delivering sustainable abundance with our affordable AI-powered robots. So this phrase, I like this phrase, sustainable abundance for all. If you say, like, what's the ideal future that you can imagine? That's what you'd want. You'd want abundance for all in a way that's sustainable. It's good for the environment. Basically, this is the happy future. If you say, what's the happiest future you can imagine? One which is, that would be a future where there's sustainable abundance for all. Closest thing to heaven we can get on Earth, basically. So thank you again to the Tesla team for all their efforts at the challenging time. I look forward to continuing to lead the team to great success in the future.
Great. Thank you very much, Elon. Before we move on, Vaibhav has some opening remarks as well.
Thanks, Elon. As Elon mentioned, in Q1, we achieved something which has never been undertaken in the automotive industry of updating all our factories for the best-selling car in the world all at the same time. And this people don't understand, this was not a small feat. We're not aware of anybody else being able to do the best-selling car all at once within a quarter, and that too hitting all the timelines which we had established at the beginning. So big kudos to the team for making this happen. Additionally, we also hit record gross profit for energy storage business in the quarter. Now, getting back into the business, there's been a lot of speculation as to the reasons for decline of our vehicle deliveries in the first quarter. We had previously guided that we will be updating all factories, and this would lead to several weeks of lost production, which did happen as planned. The ripple effect of the change is not having enough new Model Y available in most markets for people to see and experience till the last few weeks of the quarter. Additionally, the negative impact of vandalism and unwarranted hostility towards our brand and our people had an impact in certain markets. Despite this, we were able to sell out legacy Model Y in US, China, and a few other markets within the quarter. And again, just so people understand, we were producing the legacy Model Y till middle to end of February. And we switched over and we were able to still sell out within that period. So again, big achievement by all the people at Tesla to make it happen. We have a very extremely competitive vehicle lineup, which with most vehicles going through a recent update. And add to that, advances in FSD, you have a personal chauffeur, which can take you almost anywhere under supervision. There are numerous stories shared by customers ranging from how it has improved their daily commute, to providing mobility to customers with disabilities, to giving older customers the ability to travel comfortably and independently. Not only is FSD supervised safer than a human driver, but it is also improving the lives of individuals who experience it. And again, this is something you have to experience, and anybody who has experienced just knows it. And we've been doing a lot lately to try and get those stories out, at least on X, so that people can see how other people have benefited from this. Now, coming into some of the financial stuff, auto margins declined sequentially, primarily due to the reduction in the total number of deliveries, lower fixed cost absorption due to factory changeovers, and lower regulatory credit revenues, offset by a slight increase in pricing due to the launch of new Model Y, despite incentives which we had to sell legacy Model Y. Our energy storage business, like I said before, has achieved yet another milestone of great highest gross profit in the quarter. This was despite sequential decline in deployments. The importance of this business, as Elon mentioned, is pretty profound, especially in this environment, because if in order for grid to work properly with the demands from AI and all this, you need some more stability. And this is by far the simplest and best solution which we are aware of, which can help do this. And we've also developed certain unique solutions to help our customers to achieve this. Additionally, on the Powerwall side, we've been selling the new Powerwall 3, and it's been received with very good reception from customers, and to the extent that we are currently supply constrained. On services and other margins, they were slightly down sequentially, primarily because of the pressure on our used car business and insurance business. Note that we continued our journey to improve profitability in our services and collision business through better labor productivity. As previously discussed, our operating expenses continue to increase sequentially, primarily due to our AI-related initiatives, including Optimus, and also cost of development for our vehicle programs, including Cybercab, Semi, and cheaper models. These expenses flow through R&D. We believe, even in the current environment, it is the right strategy in making investments in these areas to position us for the long term. These increases were offset by decreases in SG&A from changes in our vehicle referral program. Other income reduced significantly on a sequential basis. The primary reason was Bitcoin mark-to-market loss in Q1 versus gain in Q4, resulting in a $472 million drop. The remainder of the change is because of FX remeasurement. With the adoption of the new mark-to-market standard for Bitcoin, we expect increased volatility in other income in addition to the FX volatility. I know tariffs is the hottest topic which people talk about, and it has various impacts to our business. As Elon mentioned, on the vehicle business, we've been on this journey of regionalization for years. Specifically in the US, Model Y has been rated the most American model made car on Cars.com Made in America Index 3 years in a row. This in part is of all the work which the team has been doing over the years. And to the extent that today, if you look at our vehicle lineup in US, we're about approximately on a weighted average basis, 85% USMCA compliant. So like Elon said, this definitely gives us a bigger edge as compared to our other OEMs in terms of managing the tariffs, but we're not immune because when the Section 232 auto tariffs become effective in May, which includes Canada and Mexico, and Canada and Mexico has been part of our regionalization strategy, they will have an impact to our profitability. And I know research modeling on this impact has been about a couple of thousand, which is pretty much in line with what we've been forecasting. The impact of tariffs on the energy business will be outsized since we source LFP battery cells from China. We're in the process of commissioning equipment for the local manufacturing of LFP battery cells in the US. However, the equipment which we have can only service a fraction of our total installed capacity at Lathrop. We've also been working on securing additional supply chain from non-China based suppliers, but it will take time. Also note that, Megafact, irrespective of all the impact on US from tariffs on the energy business, we do have Megafactory China, which just started operations in Q1, and that should take care of our business outside of US. There's also an important impact of tariffs on our capital investments. I know this is going to sound counterintuitive since in order to onshore manufacturing or expand lines, we have to bring equipment from outside the US because there is not that much capacity in US. And the current trade environment, such equipment being brought in is subject to
The expense of bringing it in from China right now.
exactly. And the reality is that China has the basic one which has the most capacity to provide these equipment. Our CapEx guidance, inclusive of model tariffs, even with the optimization we have tried to do, it is forecasted to be still in excess of 10 billion this year. And we're still evaluating what more to do on this thing. To summarize, we have near-term challenges in our business due to tariffs and brand image. We think our strategy of providing the best product at a competitive price is going to be a winner. And this is the reason we're still focused on bringing cheaper models to market soon. The start of production is still planned for June. Additionally, the advancement in FSD-related features, including pilot robotaxi launch in Austin later this year, should help create a new era of demand. I would like to thank everyone at Tesla and our customers.
Fantastic. Thank you very much, Vaibhav. Now we will move on to investor questions. We will start with questions from say.com. First question is, what are the highest risk items on the critical path to robotaxi launch and scaling?
It is Ashok.
Yeah, we've got Ashok on.
Sure. Well, just to clarify disambiguate the cybercab from robotaxi once again. When will the Teslas, because the Teslas that will be fully autonomous in June in Austin will be Model Ys. So that is that's currently on track to be able to do paid rides fully autonomously in Austin in June. and then to be in many other cities in the US by the end of this year. It's very difficult. It's difficult to predict the exact ramp, sort of week by week, month by month, except that it will ramp up very quickly. So it's going to be like basically an S curve where it's very difficult to predict the intermediate slope of the S curve, but you kind of know where the S curve is going to end up, which is the vast majority of the Tesla fleet being autonomous. So that's why I feel confident in predicting large-scale autonomy around the middle of next year, but certainly the second half of next year. Meaning, I predict that there will be millions of Teslas operating autonomously, fully autonomously, in the second half of next year. Yeah. It does seem increasingly likely that there will be a localized parameter set where sort of like that the especially for places that have, say, very snowy weather, like say if you're in the Northeast or something, that like there's, you can think of it, it's kind of like a human. Like if you could be a very good driver in California, but are you going to be also a good driver in a blizzard in Manhattan? You're not going to be as good. So there is actually some value in, you can still drive, but your probability of an accident is higher. So it's increasingly obvious that there's some value to having a localized set of parameters for different regions and localities. But this is I put that in the nice to have category. It's not the required category. Again, it's really the car is just very much like a human. It's digital neural nets and cameras, and humans operate with biological neural nets and eyes. And so the same strengths and weaknesses will be present for a digital neural net and cameras versus a biological neural net and eyes. Ashok, if you'd like to elaborate on that.
Yeah, and speaking to the location-specific models, we still have a generalized approach, and you can see that from deployment of FSD supervised in China, where with this very minimal data that's like China-specific, the models generalize quite well to completely different driving styles. That just like shows that the AI-based solution that we have is the right one, because if you had gone down the previous rule-based solutions or like more hard-coded HD map-based solutions, it would have taken like many years to get China to work. You can see those in the videos that people post online themselves. So the generalized solution that we are pursuing is the right one that's going to scale well. And you can think of this like location-specific parameters that Elon alluded to as like a mixture of experts. And if you're sort of like familiar with the AI models like Grok and others, they all use this mixture of experts to sort of like specialize the parameters to specific tasks while still being general. This makes the model use limited amount of compute to solve for the diversity of tasks that it has to solve. In terms of addressing the question that asks for, what are the critical things that we need to get right, one thing I would like to note is validation. Self-driving is a long-tail problem where there can be a lot of edge cases that only happen very rarely. Currently, we are driving around in Austin using our QA fleet, but then it's like super rare to get interventions that are critical for robotaxi operation. And so you can like go many days without getting a single intervention. So you can't easily know whether you're improving or regressing in your capacity. And we need to build out sophisticated simulations, including neural network-based video generation. That's all happening in the background to make sure that we deliver a safe product and we are able to measure our safety, even though we can't just like see it by driving around the block or something like that. As
Yeah, I mean,
anyone has
it's,
experienced, yeah.
I mean, very basic terms, if we're seeing an accident every 10,000 miles, well, then you have to drive 10,000 miles on average before you get an accident or an intervention. So it's like, okay. Now imagine, I mean, we must be really, people must be very worked out by the sheer number of Teslas doing circuits in Austin right now. We're like, well, it's going to look pretty bizarre.
Yeah.
Some people are chasing us away.
Yeah. There's just always a convoy of Teslas going well, just going all over to Austin in circles. But yeah, as I just can't emphasize this enough. In order to figure out the long tail things, if it's 1 in 10,000, let's say it's 1 in 20,000 miles or 1 in 30, then now the average person drives 10,000 miles in a year. So now try to compress that test cycle into a matter of a few months. It means you need a lot of cars doing a lot of driving in order to compress that, to do in a matter of a month what would normally take someone a year.
Yeah, and
Yeah,
I
exactly.
would just also add that, if you haven't looked at those videos coming out of China, people are
Oh yeah, those
really
videos are
putting it-
amazing.
Yeah, they're putting it to real test. I mean, they're
I
taking
say
it
that
to
the-
dirt roads.
Frankly, I think the Chinese consumer might be the most American consumer, and I actually, our customers in China are awesome. They have a lot of fun with the cars. I saw one guy take a Tesla on autonomously on a narrow dirt road
Yes.
across like a mountain, and I'm like, still a very brave person. And the Tesla's driving along on a road with no barriers, where if he makes a mistake, he's going to plunge to his doom. But it worked.
Great, thank you.
And if the question was on CyberCab itself,
Yeah,
we're in B sample validation now.
yeah. We should ask that question too.
Yeah, we have our first like big builds coming at the end of this quarter, within Q2, and then in the coming months we start to large scale installation of all the equipment in Giga Texas with still on schedule for production next year.
Yeah, and I just want to also clarify, because I think people don't understand. They think that there is no new building being built, and where is CyberCab going to
Oh,
be?
it's in the Giga.
It's within the same
Yeah.
factory.
Yeah.
It's happening and people don't know it's just happening upstairs and all along the lines while we're still building the Model Ys and Cybertrucks every day.
Yeah, it's worth noting that the Tesla Gigafactory in Austin is 3 times the size of the Pentagon.
Including the garden. Yeah.
Yeah, including the Ground Zero garden. So I go visit the Pentagon. I'm like, this building used to look big, but anymore.
Great, thank you very much. The next question is, when will FSD unsupervised be available for personal use on personally owned cars?
But before the end of this year, not necessarily let's say so within the US, like we do want to test, like we're at Tesla, we're absolutely hardcore about safety. We go to great lengths to make the safest car in the world and have the lowest accidents per mile, and fewest lives lost. So we want to be very careful. So we want autonomy to be definitively safer than manual driving. So it's not enough that it just be as safe. It needs to be meaningfully safer than if it's cars manually driven. So and we want to confirm that there's not something. We just want to be cautious with the rollout. We don't want to jump in at the deep end with an army. So, but that said, I think we should be able to have it work in several cities later this year for personal use. The acid test being you should be able to, can you go to sleep in your car and wake up at your destination? And I'm confident that will be available in many cities in the US by the end of this year.
Great, thank you very much. The next question is Tesla still on track for releasing more affordable models this year? Or will you be focusing on simplified versions to enhance affordability, similar to the rear-wheel drive Cybertruck?
Yeah, we're still planning to release models this year. As with all launches, we're working through like the last minute issues that pop up. We're knocking them down one by one. At this point, I would say that ramp maybe might be a little slower than we had hoped initially, but there's nothing, just kind of given that turmoil that exists in the industry right now. But there's nothing that's blocking us from starting production within the next, within the timeline laid out in the opening remarks. And I will say it's important to emphasize that, as we've said all along, the full utilization of our factories is the primary goal for these new products. And so flexibility of what we can do within the form factor and the design of it is really limited to what we can do on our existing lines rather than building new ones. But we've been targeting the low cost of ownership. Monthly payment is the biggest differentiator for our vehicles. And that's why we're focused on bringing these new models with the lowest price to the market within the constraints I just highlighted.
Great, thank you very much. The next question is, does Tesla see robotaxi as a winner-take-most market? And as you approach the Austin launch, how do you expect to compare against Waymo's offering, especially regarding pricing, geofencing, and regulatory flexibility?
Well, okay. The issue with Waymo's cars is they cost way more money. From shot. But that is the issue. The cars are very expensive, made in low volume. Teslas are, I don't know, probably cost a quarter or 20% of what a Waymo costs, and made in very high volume. Ironically, we're the ones that made the bet that a pure AI solution with cameras and audio, the car actually will listen for sirens and that kind of thing, is the right move. And Waymo decided that an expensive sensor suite was the way to go, even though Google's very good at AI. It's ironic. And it is worth noting that Tesla's built an incredible AI software team and AI hardware chip design team. From scratch, from nothing. We didn't acquire anyone. We just built it. So, yeah, it's really, I don't see anyone being able to compete with Tesla at present. I'm sure that'll change eventually. But at least as far as I'm aware, Tesla will have, I don't know, 99% market share or something ridiculous. That 90-something%, at least, I don't know, at least some of them might change, but if we have millions of cars deployed next year, and unless others have millions of cars deployed, we'll have, unless we're blocked by regulatory situations, it won't be long. In a few years, we'll have 10 million autonomous cars on the roads, then, and counting.
The other thing which people forget is we're not just developing the software solution, we are also manufacturing the cars.
Yeah.
And what Waymo has, they're taking cars and then trying to put
Way more money.
We don't do that. So that definitely gives us a big leg up. And like Elon said, we already have a big existing fleet, which hopefully with the software update could become autonomous.
With the software update, it will become autonomous. To be clear, the Model Y that we're talking about in being autonomous in Austin in June are the Model Ys we make currently. There's no change to it.
I think people don't appreciate that the car which they can buy today,
The car that they have.
or the car they have, is capable of
Yeah.
these kind of things.
In fact, it does drive autonomously from the factory to the end of line, every car
Yeah.
nowadays.
So
In the
there's
US.
through the tunnel, the Model Ys, everything.
Right.
Yeah.
Exactly. We have, it is being put to use. It's doing useful work fully autonomously at the factories, as Ashok was mentioning. The cars drive themselves from end of line to where they're supposed to be picked up by a truck to be taken to the customer. And I'm confident also that later this year, the first Model Y will drive itself all the way to the customer. So from a factory in Boston and one here in Fremont, California, I'm confident that from both factories, we'll be able to drive directly to a customer from the factory.
Cool delivery.
Yeah. Literally goes from the end of line and drives themselves to your house.
It's important to note in the factories, we don't have dedicated lanes or anything. People are coming
Yeah.
in and out every day, trucks delivering supplies, parts, construction, you know, for
Well,
the,
and people can film it. By the way, you
Yeah.
can see this from the road, like
Yeah.
it's uncovered.
exactly.
In this videos, people take videos online, and anyone who wants to go see it can just drive past our Fremont factory and see the autonomous
It's
cars
like
driving
that.
themselves. Yeah, and they drive themselves and they put themselves in the exact right spot to be picked up.
Yeah, the logistics yard is right there in the open.
Yeah,
We don't move it again to another lane.
but they go to a specific spot, parking
Exactly.
spot.
Yeah.
Yeah. So that's just a routine, like everyday thing now.
Great, thank you very much. The next question is, can you please provide an update on the unboxed method and how that is progressing?
Sure. It's progressing, absolutely. As I mentioned just a minute ago, like it is the basis for our CyberCab manufacturing process. It's really what we changed in order to allow the low cost of production and also get the super high levels of automation. Really levels of automation that are sort of unheard of in the vehicle manufacturing scale. It's like not something that, when you see it be produced, you'll think of in terms of like, wow, that's how a car has been built for 100 years. It's really something we've changed. In the past year, we've been like focusing on a lot of key development areas, like marrying these large subassemblies together in a precise way, in an accurate way. We've also de-risked things like corrosion of uncoated aluminum structures, the sealing across the seams of the vehicle, and when you marry assemble components. And we've even done early crash testing and proven that it's going to be just as safe as every other car we built. And so like with all that combined, we kind of go into the builds that we have at the end of this quarter for the CyberCab product, and that's the next real big test of full scale, integration of the unbox process. And yeah, that's kind of where we are. So you'll see them in test and on the test roads in a couple of months.
Yeah. And although the line won't be upset at this rate
Initially,
this is a revolutionary production system. I'm not sure what the right word is. Unboxing sounds like something like when you get your phone.
can you open it up?
Yeah, you have like a pleasant experience when you take your phone out of the box. But which of course is nice, but this is much more revolutionary than that. This is a profound reimagining of how to make cars in the first place. No car is made like this anywhere in the world. The factory is the product as much as the car is the product. So it's really just the first principles approach to manufacturing that will ultimately allow us, I think, I'm confident ultimately it'll allow us to achieve a cycle time, meaning a unit every 5 seconds or less off a single line.
And we want to incorporate some of these for testing it into our existing production lines as well to us with the line Cybertruck already.
This is something I've been thinking about for a long time, and I've sort of been thinking about this for a long time, and it's kind of it's not a crazy thing. Like a car every 5 seconds may sound like it's coming out like bullets, but actually it's coming out at walking speed.
It's like a meter a second.
A meter a second. So this is like we're still far away from caring about the aerodynamic drag of the manufacturing line. Because you're still at 3 miles an hour type of thing.
It doesn't make
Every 5 seconds sounds crazy, but it's 3 miles an hour. That's what we're talking about. So yeah, you can run away from it basically. But that's still by far the fastest line on Earth. And it's like half order, like I don't know, What's like the best single line? I don't know if it's like about,
Shanghai phase 2.
and that's us.
33 seconds.
Yeah.
So we're the fastest, right?
I would think so.
We think we're the fastest at 33 seconds in our Shanghai factory, but this would be, you know, 6 times faster or 7 times faster thereabouts. So, yeah, it'll be slower than that at first, but the point is that like when you fully optimize the design and operation of the next generation factory that we're building right now, a 5-second cycle time or less is the design is capable of it, you know. So if you like when you go through like a radical new architecture, you go from like being like an A, I mean, I'd say like probably Shanghai in particular is an A plus on a moderately, you know, an advanced but still traditional car production system. Sort of, they're really doing about as good as possible to do within a conventional scenario. So trying to get much below, you know, but sort of below like 30 seconds is extremely difficult. But if not, and you start getting into sort of impossible where you just you have to be faster than a human could possibly move. So then the autonomous line, it really just needs to be robots moving really fast, and that's where you get to sub 5 seconds. But we'll start off with getting a C in, instead of an A, getting a C in a new architecture. But then the potential is there over time to move that up to an A plus within an A plus architecture.
Great, thank you very much. The next question is, how is Tesla positioning itself to flexibly adapt to global economic risks in the form of tariffs, political biases, et cetera?
As Elon said, you know, we've been supply chain team been at it for a while. We continue to mitigate global economic risks like tariffs and political biases by regionalizing part supply near its factories in North America, Berlin, and Shanghai. For example, in North America, our high volume vehicle programs have over 85% North America content, and Shanghai vehicles have over 95% local content. Berlin has similar levels of regionalization as North America when you exclude the battery, and we are working on regionalizing the battery as well. This is a pre-pandemic strategy that we accelerated post-pandemic through supply diversification, dual sourcing, vertical integration, advanced analytics, and local partnerships to ensure supply chain resilience and production stability. Having said that, we're not 100% insulated, and these tariff risks are higher on our low volume platforms than the high volume ones.
Yeah. In fact, there's no more vertically integrated car company than Tesla. I mean, we're the most vertically integrated car company since, you know, Henry Ford back in the day when they were doing mining iron and stuff, and growing rubber trees. So, like we're not growing rubber trees and mining iron yet, but we have built a lithium refinery in South Texas, and it's the biggest lithium refinery outside of China, I think. Is that right?
Yeah, I think so.
Right? Oh,
Once it's done.
yeah. But it has its output potential would be the biggest lithium refinery outside.
Yeah, and we've got space to expand it if we need to build more.
Right. So, and then we've got the cathode refinery in Austin next to the Gigafactory. We're going to figure out what to do about the anode. It's an ongoing subject of discussion. The best of all possible worlds would be figuring out how to have no anode. Best anode, best part being no part. That's the dream of the lithium batteries, to be anode, not have an anode. But either way, we've got to have the anode, the cathode, and the lithium, and the electrolytes, and the separator to make a cell. But you know, there's no other car company that is building lithium refineries and cathode refineries. We're ridiculously vertically integrated, and thus our best position to protect against supply chain disruptions.
Yeah.
Right. Lonnie, do you want to talk about the progress in the front?
Yeah,
certainly for our in-house cells, we've multi-sourced every component. We have, every part coming from at least 2 different countries of origin, which is, that we started the supply chain team and the engineering team worked together on this for the last couple of years to put that together. It's not something we did in a couple of months. This is years of work. So we're in a good position to take advantage of that, and the insourcing of lithium and cathode, they're the 2 most critical parts of the battery. That's right in our backyard, and we're totally insulated from.
Well, they need to be in operation.
They need to be in operation. Once they're running.
And we also make our own cells, by the way. So
Right.
cell production, if you look, there's you make the anode, the cathode, the lithium, the electrolyte separator, the can, and then you got to put all that together in the cell factory. And there are entire companies that all they do is produce cells, but they don't do the other stuff. They don't refine lithium or the cathode or, so our cell production is going quite well, and I think we're currently sort of the lowest cost per kilowatt hour.
Yeah. For all the cells we purchase in North America.
Yeah, so it's
Lowest cost to us.
yeah, so we have the lowest cost per kilowatt hour, all things considered. So the Tesla cell is the most competitive cell. For a kilowatt hour put into a car, if it's a Tesla cell, it's lower cost than if it's a supplier cell.
Yeah, and the plan this year is to really build off that base. Getting to lowest cost is, it's the hardest challenge for cell manufacturing. It's relatively easy to build a flashy product that does one thing well. To build something at high volume and low cost is super difficult, and we're kind of using that as a base to then build off and add performance in different areas for new products coming out.
Yeah. So
Yeah, I mean, to Elon's point, there's a lot of advantages for regionalization. The most important thing is we're not tying up working capital for 6 to 8 weeks on the ocean. If there's a design change, then everything that's in transit basically has to be scrapped. Secondly, port disruptions, as we saw during COVID, can be very expensive because slight disconnects can shut down production. So then your only option is costly air expedite. It also gives us resilience in supply chain. If one region is down, we can bridge with others. It's more work to set up in the beginning, but it's critical to have when the need arises. Having said that, it's unrealistic to assume 100% regionalization across the board for specialized areas such as semiconductors. In such cases, our team works very closely with our partners to ensure we have strategic banks in place, and a disruption doesn't impact production while we stand up the regional manufacturing for that particular commodity.
And I'll say, like, on the rest of the vehicle, like Elon was talking about with cells, we're also heavily vertically integrated, import ingots, and turn them into castings. We recycle those and melt them. There's the same thing with plastics, but it doesn't mean we're not exposed. We do have some areas where we use rare earth magnets, and we've been working for years to find alternative sources and bring those up, as well as we have our induction machines. And as we've mentioned in the past, we're working on ferrite numbers for some time. So, like, as Karn said, with our heavy regionalization percentages, we're definitely like the lowest, exposed to this, but we're not completely immune, as Bob mentioned in his opening remarks.
Great. Similarly related, on the battery side, does Tesla still have a battery supply constraint as noted on the Q4 call? And does that change with tariffs?
So this is Karn. We've been working very hard to expand battery cell production in the US, both with vendors and what Bonnie mentioned earlier with the 4680 program. And we're also working on moving the upstream supply chain for battery cells to the United States for several years. And that strategy is really starting to pay off now. As it stands right now, we're not constrained on battery cell supply for vehicles. The recent tariffs do pose some challenges to Tesla Energy, like our CFO mentioned earlier, but it's something we've been anticipating and we should be able to resolve in a timely fashion. We actually have a plan in place and we're executing towards it. We also have some other sources coming online to supplement the shortfall. And then, of course, we have the L3 production that's happening in-house. We have a slight disconnect of aligning the right cells with the right packs. So that's the little bit of puzzle that we have to solve internally. But as far as cells go, there's no shortage.
Great. Thank you very much. The next question is, did Tesla experience any meaningful changes in order inflow rate in Q1 relating to all of the rumors of brand damage?
So in Q1, as mentioned earlier, we took the best-selling car of the last 2 years and ramped up all 4 of our global factories. And in less than 8 weeks, we've already gotten to the rate of our previous Model Ys in the factories. So just kudos again to the team for the great job there. And despite the economic strain and negative articles that in California in Q1, Tesla remained the best-selling car, not just EV. And additionally, we had a record number of test drives globally in Q1 as well. So interest remains high. And so right now we continue to see, good interest still in the vehicle.
Yeah, I mean, Tesla's not immune to sort of the macro demand for cars. You know, so when there is economic uncertainty, people generally want to pause on buying, doing a major capital purchase like a car. But as far as absent macro issues, we don't see any reduction in demand.
Correct. And that's where we continue to focus on affordability, and it's a fundamental focus there.
Yeah, fantastic. Thank you, guys. The next question is regarding the Tesla Optimus pilot line. Could you confirm if it is currently operational? If so, what is the current production rate of Optimus bots per week? Additionally, how might the recent tariffs impact the scalability of this production line moving forward?
No, Optimus, I just want to emphasize, Optimus is still very much a development program. It's not a large volume production. That's why, this year, we'll make a few, we do expect to make thousands of Optimus robots, but most of that production is going to be at the end of the year. So almost everything in Optimus is new. There's not like an existing supply chain for the motors, gearboxes, electronics, actuators, really anything in the almost anything in the Optimus, apart from the AI for Tesla, the Tesla AI computer, which is the same as the one in the car. So when you have a new complex manufactured product, it'll move as fast as the slowest and least lucky component in the entire thing. And as a first order approximation, there's like 10,000 unique things. So that's why anyone who tells you they can predict with precision the production ramp of a truly new product doesn't know what they're talking about. It is literally impossible. So you go through this like series of constraints where it's like this part's the limiting factor, now that part's the limiting factor, now this part's the limiting factor, and multiply that by 1,000 basically. And then the rate of the production ramp is decided by how quickly you can solve each of those problems. Now, Optimus was affected, by the magnet issue from China, because the Optimus actuators in the ARM do use permanent magnets. Now, Tesla as a whole does not need to use permanent magnets, but when something is volume constrained, like an ARM of the robot, then you want to try to make the motors as small as possible. And then, so we did design in permanent magnets for those motors, and those were affected by the supply chain, by basically China requiring an export license to send out any rare earth magnets. So we're working through that with China. Hopefully we'll get a license to use the rare earth magnets. China wants some assurances that these are not used for military purposes, which obviously they're not. They're just going into a humanoid robot. So it's not a weapon system. But that is an example of a challenge there. But I'm confident we'll overcome these issues, and we'll, by the end of this year, have thousands of Optimus robots.
Great. Thank you very much. And the last question we already covered earlier, whether robotaxi was still on track for this year. So with that, we can move on to analyst questions. The first question is going to come from Pierre at New Street. Pierre, please unmute yourself.
Hey guys, can you hear me?
Yeah.
That's great. So I'm super excited to hear robotaxi and Optimus becoming the very tangible future for Tesla. But I have actually a question on the legacy, not the legacy, but the current auto business. And when I look back at the ramp of Model 3 a few years ago, I really saw it as being the iPhone of cars, a new product, completely reinvented, very different user experience, vastly superior, impossible to match for traditional competitors. And for the iPhone, it resulted in the high end of the smartphone market quadrupling in size, and actually Apple taking 60% market share. And so when you look at the Model 3 and the Model Y today, I think they are still really vastly superior to any other cars. And I wonder why they've taken about 15% of their addressable market and not more, actually. So another way to put it is, why are there so many people still buying BMWs and Mercedes, knowing that the Model 3 and the Model Ys are out there and available? And I wonder if you're trying to solve that riddle internally, if you understand why, what are these auto buyers who are not buying a Model 3 or a Model Y missing? And if you have ideas of things you could do to address that, maybe there is enormous value left on the table there. Yeah, that's what I'm wondering these days.
Yeah, the reality is that in the future, most people are not going to buy cars. So it's kind of what one could sort of say, look, if you think want to continue with your phone metaphor, you can remember the days of the flip phones when there was 100 different flip phone designs, and I would the mistake that manufacturers made was to try to make many different variants of a flip phone, which was a mistake. They should have made the iPhone. Because obviously everyone's going to want a smartphone. But in the beginning of when the iPhone came out, I was like, wow, I can't believe these guys are not reacting as though this is death. But they didn't. They kept making variants of flip phones. Nokia, I think at one point was the most valuable company in the world, or close to it. But they kept making flip phones. Trying to find another market niche. Maybe somebody wants a phone of a different style, maybe this different color or whatever it is. Nope, they just want a super intelligent phone that can do everything. Just one. So I said this many years ago. But in the future, in the not too distant future, buying a gasoline car that is not autonomous will be like riding a horse while using a flip phone. Some people still do it, but it's rare.
Great. Thank you. The next question comes from Emmanuel Rosner at Wolf. Emmanuel, please unmute yourself.
Great. Thanks for taking my question. So Elon, the public version of the FSD software still has a decent amount of, I guess, intermittent human interventions that are required. So what's still required for the software on your end to get to a level where it doesn't need to be supervised? And I'm asking that in the context of, obviously, the June launch being in the next couple of months. What still needs to happen?
And we are working on a number of items to improve the robustness. Yeah. We are aware of the interventions that are happening in the public bills, and that's why we are hardcore burning it down. And really just picking some initial launch city helps us focus on solving all the issues that we face here. For example, like it's focusing on Austin, we're not like solving all the issues that customers in Boston or somewhere else might face. And then here we just like have a big list of all the issues, just burn it down, and that's what the team is working on, along with other sort of like redundancy issues. For example, if one of the computers goes down right now in the customer fleet, it would like throw the red hands and ask you to take over, but we don't want that kind of situation. So you're solving both like the reliability issues of the autonomy software and also the reliability issues of the system software together for Austin.
Yeah, it really we just worked through a long tail of unusual interventions. So, and these are really very rare. Like as I was saying earlier, you have intervention every 10,000 miles. I mean, that's a lot of driving you got to do to even find one case where that happens.
Yeah, and some interventions
But
are
the
happening due to systematic like missing functionality. For example, for handling emergency vehicles correctly, you don't need to consume audio as an input. But then the customer-facing versions don't have audio input, but the version that's in that's going to be in Austin will have audio input and so on.
Okay, but would you have like remote operators, for example?
I mean, every now and then, if a car gets stuck or something, someone will like unblock it. But it's just because we are a bit conservative and tend towards more safety than even if we get stuck every now and then. We do have remote support, but it's not going to be required for safe operation. If anything, it's just required for more availability.
Anyway, it's only a couple months away, so you can just see it for yourself in a couple months in Austin.
Great. Our next question comes from Edison at Deutsche Bank. Edison, please unmute yourself.
Hi, thank you very much for the question. So I want to ask about the Optimus supply chain going forward. You mentioned very fast ramp up. What do you envision that supply chain looking like? Is it going to require many more suppliers to be in the U.S. now because of the tariffs? How does one kind of think about what needs to happen there?
We have to see how things settle out. I don't know yet.
Right.
I mean, so some things we're doing, as we've already talked about, which is that we've already taken tremendous steps to localize our supply chain. I think we're more localized than any other manufacturer, and we have a lot of things underway that to increase the localization to reduce supply chain risk associated with geopolitical uncertainty.
Did you have a follow-up?
Yeah, wanted to come back actually to the robotaxi. Then, do you have a sense on how many cars or how big the scale will be initially and how that might ramp up? I know you're targeting millions of vehicles in the second half kind of next year, but initially at launch, how many vehicles would be reasonable? And is it going to be as simple as if one goes to Austin, let's say in late June or July, you'll be able to request?
Yeah. We're still debating the exact number to start off on day one, but it's like, I don't know, maybe 10 or 20 vehicles on day one. Watch it carefully, then scale it up rapidly after that. So, we want to make sure that we're paying very close attention the first time this happens. But yeah, you'll be able to, end of June or July, just go to Austin and order a Tesla autonomous drive.
Great. The next question comes from George at Canaccord.
Hi, thank you for taking my question. It has to do with FSD pricing. Could we envision when you launch unsupervised FSD that there could be sort of a multi-tiered pricing approach to unsupervised versus supervised, similar to what you did with autopilot versus FSD in the past? Thank you.
I mean, this is something which we've been thinking about. I mean, just so you know, for people who have been trying FSD and who've been using FSD, they think even the current pricing is too cheap because for $99, you're basically getting a personal show.
Yeah, I mean, we do need to give people more time to like, if they want to look at, like a key breakpoint is, can you read your text messages or not?
Yes.
Can you write a text message or not? Because obviously people are doing this, by the way, with unautonomous cars all the time. And if you just
Not
go
very
for a drive down the highway and you'll see people texting while driving, you know, doing 80 miles an hour.
And putting the makeup on at the same time.
Yeah, putting on makeup, doing their hair with the mirror down, and texting and driving at 80 miles an hour. This is a common occurrence. So people eating lunch, you know, you name it, shaving, you know. Anyway, but right now the car is very insistent that you pay attention to the road, which reduces the value somewhat, because it's very rigorous about you paying attention to the road. And we'll gradually lighten up on that with, you know, every few weeks or every month, we'll relax that a little bit, make it so you can be more and more able to do things you want to do, and not have the car demand your rigid attention. So that value, it'll really be profound when you can basically do whatever you want, including sleep, and then that $99 is going to seem like the best $99 you've ever spent in your life.
Great. And George, did you have a follow-up?
My follow-up is about geographic expansion. Just maybe discuss additional markets. You know, there's been some news around India recently that you could launch this year and next. Thank you.
So yeah, I mean, we've been working on getting into India. India is a very hot market, and especially the current, and I don't want to talk just about tariffs, but the current tariff structure with India is that any car which we send in is subject to 70% tariff. Also like a 30%, you know, luxury tax on it. So, you know, the same car which we're sending is like 100% more expensive than what it is. So that creates a lot of, you know, anxiety. It's like, you know, people feel, okay, they're paying too much for the car. And by the way, we're not getting the money. The local government is getting the money. And that's why we've been very careful trying to figure out when is the right time. Like I said, we are working on it. It would be a great market to enter because India has a big middle class, which we would want to tap in, and that is the market which we want to be in. But again, these kind of things create a little bit of tension, which we're trying to work around.
Great. Thank you so much. The next question comes from Adam Jonas at Morgan Stanley. Go ahead, Adam. We can't hear you, Adam. So maybe we'll put you back in the queue, and we'll move to Colin Langan from Wells Fargo while Adam figures out his audio. Colin, please unmute yourself.
Oh, great. Do you hear me?
Yes.
Oh, great. You know, you're still sticking with the vision-only approach. A lot of autonomous people still have a lot of concerns about, you know, sun glare, fog, and dust. Any color on how you anticipate on getting around those issues? Because my understanding, it kind of blinds the camera when you get glare and stuff.
Actually, it does not blind the camera. We use an approach which is direct photon count. So when you see a processed image, so the image that goes from the sort of photon counter, so the silicon photon counter, that then goes through a digital signal processor or image signal processor. That's normally what happens, and then then the image that you see looks all washed out, because if you point the camera at the sun, the post-processing of the photon counting washes things out. It actually adds noise. So quite a big breakthrough that we made some time ago was to go with direct photon counting. and bypass the image signal processor. And then you can drive pretty much straight at the sun. And you can also see in what appears to be the blackest of night. And then, in fog we can see as well as like people can. Probably better, but I'd say probably slightly better than people, than the average person anyway. Yeah.
So the camera is able to see when there's direct glare on it. I'm not surprised by that.
Yeah.
Okay. And then there were obviously media reports the other day that the affordable model was delayed. Doesn't sound like that's correct. Those reports also talked about it being more of a cheaper version of the Model Y. Any color on what we should expect? Is it a cheaper version of the Model Y, or is it actually going to be a design change with it?
So I think Lars already covered it in answering one of the say.com questions. The real thing which we are trying to focus on is affordability. And using our existing lines, and there's always limitations when you're using existing lines as to how many different form factors can you bring to. So that's the way I would say you should think about it. And I don't know if Lars anything more to add.
Yeah, and I think I said this before in other calls, like, with the recent upgrades to the Model 3 and the Model Y platforms, we made some pretty great cars at pretty great prices, and we added a bunch of features and things like that. I think it's easy to consider that, moving forward, Tesla doesn't make bad cars, and we always make, our intent is not to make a car that is any worse than any car we've ever produced in the past. And so, the models that come out in the next months will be built on our lines and will resemble in form and shape the cars we currently make. And but the key is that they'll be affordable and you'll be able to buy one.
Great. We might have time for one last question. Adam, we'll try your audio again. You want to try to unmute yourself, Adam? All right. Unfortunately, still not working.
Right.
Oh, there you go.
Sorry, guys. Technology.
Go ahead, Adam.
Yeah, hi. Yeah, in the February 28th Joe Rogan interview, Elon, you advocated for a ramp in tariffs to give people time to adjust. Otherwise, and I quote, you said the system would break and bad things would happen. So are things breaking yet? And if the tariffs as announced remain in place, when would things start breaking?
Well, at the risk of stating the obvious, I'm one of many advisors to the president. I'm not the president. So, but I've made my opinion clear to the president, and that and other people made their opinion clear to the president. He listens, he talks to many people, and he makes his decision. And I'm hopeful that the president will observe whether my predictions are more accurate than the predictions of others, and perhaps weigh my advice differently in the future. We shall see. I'm an advocate of predictable tariff structures, and generally I'm an advocate for free trade and lower tariffs. Now one does need to take a look at where if some country is doing something predatory with tariffs, or is providing extreme support for, if a government is providing extreme financial support for a particular industry, then you have to do something to counteract that. But I think that's on a case-by-case basis strategically. The president is the elected representative of the people, and is fully within his rights to do what he would like to do. So,
okay, Elon, I respect that. Just as a follow-up, and thanks again. Between China and the United States, who, in your opinion, is further ahead on the development of physical AI, specifically on humanoids? And also drones, I'd be interested. And is it even close? And kind of how? Serious. And,
well, I think the answer on drones. I mean,
Yeah.
You know, a friend of mine, Naval, made this, posted on X. I reposted it. I think a prophetic statement, which is any country that cannot manufacture its own drones is doomed to be the vassal state of any country that can. And America cannot currently manufacture its own drones. But that's again, fortunately. China, I believe, manufactures about 70% of all drones. And if you look at the total supply chain, China is almost 100% of drones have a supply chain dependency on China. So China is in a very strong position. But here in America, and we need to shift more of our people and resources to manufacturing. Because this is, I have a lot of respect for China because I think China is amazing, actually. But the United States does not have such a severe dependency on China for drones and be unable to make them unless China gives us the parts, which is currently the situation. With respect to humanoid robots, I don't think there's any company in any country that can match Tesla. Tesla and SpaceX are number one. And then now I'm a little concerned that on the leaderboard, ranks 2 through 10 will be Chinese companies. But I'm confident that rank 1 will be Tesla.
Great. Well, I think that's unfortunately all the time we have for today. We appreciate all your questions and look forward to talking to you next quarter. Thank you very much and goodbye.